Hey everybody, welcome back. It's good to be with you. My name is Mike Fairborn here for our class on swing trading, class I look forward to each and every week, folks. And if you're not familiar with swing trading, it's those little segments of the chart that we're trying to get in when prices consolidate and then just begin to break higher. So oftentimes 3 to 14 days to the upside. A lot of times you'll see the bull flags or even the bear flags in those time frames, upside or downside, other price patterns as well. Of course, we look at indicators and volume in this class too. Right now, though, too, I just noticed, and we get this from time to time because we've been doing this class for a little bit, but we're getting back into that time frame where we're seeing some consolidations in the market again. Could be on the verge of possible breakouts. Those tight ranges, those coiling ranges, when we see those, a lot of times they can be, especially when they're combined into a price pattern, they can be setups for moves. So we'll be looking at some of those today, amongst other things. We'll look at some industry action as well. But just would like to welcome you all here with us today. We've got Joe. Welcome to you, Joe. Great to have you here as well as Kevin. We've got Rob, Jay Richardson, John, Sharon. Hello to you, Sharon, as well as David and Will. We've got Ercy, as well as Kelly and Case. If I'm saying that correct, greetings to all of you as well. Yeah, if you are new, let us know in the chat. Welcome to all of you. It's great to have our vets back as well, but I'm really looking forward to our discussion today. And I would like to welcome in a good friend of mine and colleague, Mr. Cameron May. I think I've known Cameron for at least 20 years now. And I can say that he's a 20-year veteran of the markets because I've known him for about that long, very close to it. At least 18 years, but I think Cameron's been here longer than I have. Folks, definitely give us a follow on X if you haven't already. Cameron May CS, it's spelled just like it sounds. Cameron May CS. Mike Fairborn CS would love to have you on board. All right, well, let's do this. Let's hit some disclosures to get the show on the road. We've got plenty to discuss and looking forward to it. Information here is for general information purposes only. Options carry a high level of risk. They're not suitable for all investors if we tap into those today. And with that point, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Now, the paper money software application is for educational purposes only. Investing involves risks, including the loss of principal. There is no guarantee that execution of a stop order, which we will be looking at today, that it will be at or near the stop price. Now, past performance is no guarantee of future results, and dividends are not guaranteed. We will be looking at a couple of dividend comparisons, which we do from time to time in this class. Now, quick note on futures. You can see we do have some futures disclosures in there, folks. We do not trade futures in here, but futures do hold volume, and volume can be of interest for us to look at. But just wanted to highlight that right there. The futures and futures options trading does involve substantial risk. It's not suitable for all investors. Some additional information there on that as well. Okay, well, for those of you that are new, and I did recognize a few new names out there, and I'd mentioned this just kind of briefly right from the get-go, and that if you're not familiar with swing trading, we do look at a lot of different price patterns, but it's really over the time frame. And that time frame, folks, is like 3 to 14 days. In other words, it can be really quite short. And by the way, it can be shorter if we get maybe stopped out of a position, if it hits a potential exit area faster than 3 days. We've actually had some trades that we got out in within 1 day because it hit our target in 1 day. So normally this is the range, and sometimes they will extend a little bit further than 14 days, but we're really just trying to look at doing what we can to try to see what traders might use to help spot those areas where prices might be on the verge of going higher. Now, might it be tied to a flag pattern? It's a bull flag. That is a price pattern. We've talked about plenty of other patterns in here, and patterns can be interesting because, yes, they are tied in, and they're nice things that can occur with patterns. They don't always unfold, but there is a reason why, price patterns are used, is that a lot of times they do have target ranges. Targets are really nice to have, and they can help to spot strength and then weakness on the pullback, which could foretell strength going forward. And that's what we're talking about. So we'll look at indicators to help us do this. We're trying to find additional conditions that traders might examine to maybe improve their expectations of a breakout and a run higher. All right. So let's do it. Let's dive in to our markets right now and get a go of what's going on here. Now, I'm going to start off just with the general market right now. And the reason is I wanted to just take a quick peek at it. Again, we like to compare the markets this time of year sometimes to seasonal kind of moves. The 5-year, the 10-year, the 20-year are similar. I just go into the seasonality real quick and just highlight that on average, yeah, in August, we tend to kind of go sideways. In September, we tend to go down. That's not to say at all that we wouldn't get some stocks that might be flagging to the upside there. That can certainly happen. But just to let you know, a lot of companies might go sideways when the market itself begins to go sideways. Have you ever seen that before? You ever seen when the markets go down, the stock that you're in goes down, or vice versa? It does happen. And so I think really examining a lot of additional conditions that could position a trade for the possibility of a follow-through, indicators, volumes, price patterns, whatever it is you're looking for, can be really helpful, especially in times where there may be, we don't know, but if it's an average seasonal type year, there may be that sort of seasonal, traditionally seasonal weakness. And so that could be interesting. And some of those areas that have been moving, by the way, are in, here is our grid. I'll just highlight this right now. You can see over here, in fact, I'll make it a bigger screen, but notice over here with utilities, it's kind of interesting. There's a big push towards utility companies right now. It's a drive for electricity. All the demand from AI, artificial intelligence, is really pushing utility companies up higher. Now, in addition to that, we might see some rate cuts coming up. There are expectations that we'll see one in September. Right now, a number of economists and analysts are saying at least two rate cuts. Some are saying more than two. Of course, some are saying less, but it's really kind of in the 2 range. We'll see what does happen. That's just an expectation. But that too could also benefit utilities because utilities are heavily capitalized. They have a lot of equipment and they finance a lot of that equipment. If rates go higher, they end up paying more in interest expense. And if they go lower, it can go lower too. It's very interesting how that works, that dynamic on these heavily capitalized industries. But this is one that could benefit maybe a couple of different drivers right now. And do you notice over here what we might be seeing over here? Some would call this, I'm just going out on a limb here, but some might even call this a flaggish type pattern or a flag pattern on the industry itself. In fact, it might be part of a longer term flag. You notice down here, there's your initial move up. And then we get that really nice, not a correction on a flag pattern. It's more termed as a consolidation, which we're actually seeing on a number of trades out there right now, which we're going to dive into in just a second. But look at that. We got another move out of it, right? We saw the move unfold, and then here we are again, another potential consolidation with, on a really down day in the markets. I think it's still a down day, but we're getting a little bit of some signs of life over here. This is one industry that is showing some strength. And a lot of times, if we're looking at S&P 500 companies that make up this utilities group. So it's all S&P stocks that are within here. But if you see that as the sector or an industry, it's really a sector here. You're very likely to find a lot of companies that might also have similar type flag patterns. Let's pop out of this for a second. What has been sort of rounding over a little bit, and we don't know if we're going to have a rotation in it. That was my discussion last week in our markets and sectors class, is the possibility of a rotation. But look over here with me. If that were to happen, sometimes the staples can be interesting. Sometimes materials can be interesting. And really kind of one of the bigger ones that's known as a defensive type play, right over here. I even drew a long-term trend line on here just so we'd be able to spot it in the weeks ahead after we did it. And take a look. I've got to extend that trend line now too, right? And what do we get with that downward sloping trend line? We got a gap right above it. So there's a quick way to do this on these lines. By the way, if you right click, you can go to extend to the right, and that just shoots it right indefinitely. I'll show you just like that. And that's going to go on for a long time until we decide to take that off or just extend it manually. But there you go. That's a break above that range. And sometimes you need that downward sloping trend line, the slope to change in order for the underlying trend. You might see this happen first, although it doesn't always happen that way. I've seen the trend change first before this line, but when that happens with that gap, there's all kinds of interesting things that can happen. Again, healthcare sector could include a whole basket of companies in here. Pharmaceuticals, biotech, life sciences. You catch my drift there. Look at that gap. Now, if it is a measurement gap, we might have a move from here to here, and then you're just measuring the gap, the top of this gap to the bottom of the range, bottom of this gap to the top of the range. I'm just going to simply eyeball it, folks, but that might be right there, just a very minimum target. Now, let me ask you all a question. Does that kind of look like a swing trade time frame? Just look right over here, just like right in this range. It kind of does, right? And a lot of these flag patterns will set up just like that. They'll have kind of that 3 to 4 day time frame. Now, that's the minimum, but it could be more than that. It could extend beyond that range, right? But notice over here, I mean, like that is sort of a swing trade. This is when this, obviously the sector was bottoming, but you're getting the idea. Just like we saw in those earlier diagrams that we'd looked at on our charts, it's that range right there, and who knows? So I did want to look at utilities and the healthcare sector. So here are utilities again. Possible flag pattern with a breakout, just huge demand for AI. A standard Google search, there is an electricity cost to do it, to actually run that search. But on the back end for AI, an AI search is about 10 times the cost in terms of electricity for those, let's say those providers out there that do provide AI. It's 10 times as much as like a standard, old-fashioned Google type search. So there has been quite a demand for that, and we're actually going to be tying this in actually to a macro theme as well today. All right, so let's do it. What might be moving out there in this group? Quite a few in the utilities group. First off, let's look at this one. Now, this is XEL. I'll pull it up right now. XEL. So you can see too, does it have that flag pattern? It has the flag pattern, and it's actually broken a little bit sharper above the range. This might be one of the leaders in the group. It did get past earnings already, as you can see right there. So we're past earnings, I believe. Okay, I got to double check. Did we beat earnings? We did. 63 cents to 75. So a pretty good beat. And what did we do? Did we pull back? Folks, we consolidated basically, right? Hello to all of you just joining us. Just taking a look at the utilities group with recent demand in electricity. There's 72, and we're sitting right at that 72 right now. I'm just looking over here at the number. There's our 72. Let's draw a line back through there. Now, we might have, okay, close above the high to low day later today. Okay, what do we have? About 45 minutes left of the trading day. This was a really weird day, and this could have easily shaken out some people that had some potential exits in this area. I looked at this on an intraday chart, and this is one thing you can kind of take a look at. Pull this up on an intraday chart, like a 5-minute chart or a 1-minute chart. This entire tail of this candle, or shadow as they call it as well, took about 10 minutes to complete. It literally was a sharp move down and a sharp move back up, and it did have a lot of volume associated with it, as you can see right there. It went so fast, I would actually say that the market rejected this level. It was just a market rejection. So I'm really kind of looking at support maybe residing just below that 72, today's low, below today's low, or the prior day's low as a potential level there. We're going to be choosing it. I'm going to send out a poll here. We're going to look at another utility company here in just a second, but I wanted to kind of run down some of the things we're seeing here. Okay, do you see the possibility of a price pattern here? Maybe that flag pattern could be there, right? I mean, there's your breakout to holding near support. There's the pullback after earnings, possibility of a hold, close above the high to low day. I guess technically that would have to be above this level, but we are above the prior day, closing above that level. And so I would be okay putting a trade on here, and our target would be just like this extended move, right to the upside. Okay, now what would this extended move be? I'm going to use this low here as opposed to this low. So the most recent low for the flagpole itself could be in this range. And we have a decision to make. We can either go to the top here. Since I'm taking this higher low, I'm going to go ahead and take it to the top of the range and say, that's the flag of the move. And then the pullback, gosh, it's tricky with this one because it went all the way down here. I'm going to use the closing prices. Okay, I'm not going to use the shadows because that shadow is just so weird. So down here, bottom right-hand corner, a quick little tool to help us draw projected targets are these Fibonacci extensions right here. It's just to the right of the fibs. And again, that's at the bottom corner. This is how we would do it. I'm going to click here. Oh, click. Pull it up to this guy about right there. Dang, I actually clicked twice. Sorry, let's do that again. If it ever looks like that, then you know it's messed up. Okay. Click again and then again. And so our target is about 79. Well, it's right at 79. So what would we be looking at from where we're trading at right now? So about 73 to 79 or so, right? So you get a sense of the price range. The reason is I want to do a price comparison range as well on our next stock, so you can just kind of see, hey, if we were looking at a price projection, where would that be? So let's take this off. Well, let's keep it on. All right, what else could we look at here? Wow, the money flow. For example, look at money flow over here. We are barely breaking highs, barely breaking highs from this range. But look at money flow. Wow. See that high over here? I mean, when I say wow, it's a big difference. Now, does that mean it's going to go higher? No, but it's a big difference. It is a substantial difference from that high over here. Look where we're at relative to money flow. I mean, it's over here. Even this last high right there, we're still clearly above it. So the wow doesn't mean it's going to go up. When I said wow, it's kind of like you don't see that happen a lot, which doesn't mean it's going to go higher. But somebody's been buying into this according to the money flow, right? That's the cumulative purchases. And so it's substantially higher according to the money flow. Nothing's 100%, but park that in the back of your mind. Let's just do another quick comparison over here too. Trade tab, it does have a yield. We talked about this earlier. A couple different checkpoints I just want to have here. About just over 3% dividend yield, not too shabby. Not to say that you'd be in that long, but a higher yield could also attract buyers that are income minded as well. Sometimes they make that selection, and that could make a difference for people buying now, because we can't assume they're all going to be swing traders. They might be buying now for a long-term position as well. So, I mean, that can influence certain people, and it could influence the price. PE ratio about 20. Okay, so I mean, it's actually less than, let's say, the S&P 500 right there. Next company, okay, we'll throw the poll out here in just a second. Another utility, LNT, very similar but different in a few ways. Okay, let's look over here. Money flow, almost identical. Really, really strong money flow. We'll just get that one out of the way, right? So both utilities groups are experiencing strength. What do you guys think? If you're getting an accumulation of buyers, according to the money flow, we'll just say that, let's say the trader anticipates that there is accumulation of money coming in with whatever company we're looking at. So more buyers than sellers over a period of time, relatively speaking, and that's a pretty big move. Could that hint at maybe prices going up? That's the idea, using, just one volume indicator. There's more than one volume indicator, but that's why I bring that one up, right? Also, strength, relative strength of volume over here as prices are going up. We saw actually something very, very similar with XCL too. All right, but there you have it. This one didn't have near the pullback in terms of the lower shadow here, and you could say that this is probably much more set up for the hold, the close above the high of the low day. And we only bring this up, and traders will look at this. That's the acronym right there, close above the high of the low day, because there's your low day, low day, low day, low day. Oh, low day. Yeah, low day right there. Are we closing above the high of the low day? Not yet, because the market isn't closed, but some would say we're probably in a better position to close. So technically, a close above the high of the low day is maybe more likely here, is what a trader might assess, because it's above the range right now. The last one wasn't there. Okay, now let's do this comparison as well. What about the price target? Okay, so the other one was about a 9-point range, 73 to 79, I think is what it was. This one is going to be let's go ahead and just do it the same way. I'm just using the bodies of the candle right there, up to, click again, right there. That's the closing price to there. Now this is we're at 65 to about 71. So notice that, wow. Well, it's very, very close. It's 5 to 6 points. So they're basically comparable. You do not find that all the time, right? That's the price projection target using a T2 target. Remember, T1 would be back to the prior high right here. Both of these we're looking at a T2. That would be T1. Change some colors up here just so you guys get this, but a T2, which is the full price projection range, I'm using that because we might have some macro drivers that could help to influence that price going higher. By the way, Greg brought up beta. Thank you, Greg. Yeah, let's take a look at beta as well as we go through. I'll do that comparison before we're done. Okay, let's do this over here to the trade tab. Boom, boom, 3%. So it's very, very close. The other one was slightly higher, but you have to say very, very comparable. Look at the PE ratio. My gosh, it's at 20 as well. This is not helping us, you guys. This is almost identical. So this is almost the same, almost the same. The beta here, a little bit high. What was the other one? I think it was in the 30. My eyes caught it. I want to say about 33%, although we didn't go through it. XEL real quick. Yeah, 36. So one's a little bit more volatile than the other, but a lot of comparables here. Both, by the way, are past earnings, and both beat earnings. I'm sorry. Whoa, hang on. I was on the same one. My bad. I'm so sorry. You guys, I'm on the same one. There we go. LNT. Now we're back to this. Okay, there we go. Yeah, so these are still comparable here. There's LNT. So that's all the same here, but just on our price chart over here, you can see here is that's the dividend. We got past both earnings. This beat expectations, not by a ton, but there you go. So there are some comparisons in here. Last but not least, let's look at the volume on each of these. This is about 1.2 million. So look, we're looking at the liquidity of the trade here, about 1.2 as we look at this. This is just interesting because right now we're just looking at a swing trade. We're not looking at actual options or anything. We're just looking at the swing trade itself. But there you got about 1.2 million, and XEL is at 1.7. So a little bit more liquidity on the XEL today, but probably very comparable. All right, so that was a lot, but we want to go through when we have, a couple of setups, and they both might unfold, or they both might not. But it's good to go through the process of at least looking at the indicators because they're not always this comparable. These ones were pretty comparable, but not in all cases. And so it's just a good habit to do it every single time. Go through the indicators that we've talked about, we've learned, and then we'll go from there. I just sent out the poll right now, so it should be popping up shortly. If you get a chance, please vote. Generally, to have a statistical metric that is what they refer to as like a valid method, I think you have to have at least a sample size of 30. So if we could get at least 30 people to vote here, that might be more reflective of the entire, population. Generally, they'll say that, but that's just a kind of a statistical metric. So keep that in mind. I'll give it about 10 more seconds. So vote on that if you can, and we'll go from there. Now, XEL looks to be the early winner. I've seen these flip all, all the way down to the last second. So I think we're good. We'll go ahead and 60%. It's pretty close though. Okay, 61, 60. Cool. I'm going to go ahead and end the poll in 3, 2, 1. Shut her down. There we go. Okay, let's see it. Let's get our results popping up. There we go. Excellent. Thank you all. We did get above our 30 threshold in terms of votes. And so it's kind of a 2/3, 1/3. Now, it's not to say that you can't put paper trades on LNT here. We're just going to go with XEL and hit it for this group here. All right. All right. So let's dive into that, folks. By the way, let's set up a paper trade, an example trade on this right now. Folks, if you are getting value out of this presentation and you like the kind of content, first of all, great to always have you here. I really appreciate you being in this class, but go ahead and hit that thumbs up button if that is the case. It just gives me a general sense that you find this useful and informative. Of course, you can always love to have you subscribe as well on the subscriber channel there, Trader Talks. But with all that, let's just go ahead and take a look at the trade now. Let's see what we've got in store here. Okay, so that's our scenario. That's our setup. Gonna put that back to auto. I'll pull this down a little bit so we can kind of see that though. Okay, so let's go ahead and put a trade in here. Now, what I wanted to do for the potential exit point, like the stop that we talked about, and again, the stop doesn't guarantee an exit at that price. Once it triggers, obviously it could fill at a lower level. In fact, I'll just hit that one more time so I get the wording right on this, you guys. I've just to make sure, because we are putting that in, and yeah, there are some confusing areas when we talk about this, and so let's see here. Just gonna get the wording right, but it's not guaranteed to fill. I'll just say this: the stop is not guaranteed to fill at that exact price level. That's all. All right. Hey, you know what? I think that's sufficient there. I think we're good to go. All right. Because it competes with other market orders, in the market once it does get triggered. Okay. All right. So let's do this. Go back over here to the trade tab. We are in Excel. I'm going to right click under the ask price. Look at that spread, by the way. That's a beauty. It's a penny wide spread. That volumes can sometimes be so helpful in that regard. I'm just going to close those for now. But look at that. This is penny wide. I'm going to right click and we're going to go to buy custom OCO bracket order. Let's go ahead and set this up right now. We had our target since we were looking at a T2. It's not to say that we can't take it off earlier, but in case we wanted to, we sure could. There is 79. That's our upper limit. These are going to be good till cancel ordered. Those are showing on my second screen, so just to be mindful of that. We'll go ahead and put the trade in now, though. What was that lower point? It was just below the 72. I'm going to choose, let's say, what was the low? The prior day's low was 71.84. I'm going to go 71.75. So it's going to be below this range in terms of where the closing prices are. Now, you might say, hey, I might want to have my stop a little bit higher. I want that to trigger a little bit earlier in hopes of getting out at a better, if it goes against me. But it's always kind of like you need to decide what is too little and what is too much. And what I'm really looking at right now is if we are close to a Cahold or we're getting a Cahold and we start to get moving up higher here with the industry on a down day in the markets, generally speaking, when that occurs, do we think that it could fail on this? It very well might fail. And it could come back down here. Now, if it fails, we might have been wrong on what we're seeing right now because we think that today's price momentum might follow through and then a larger term move could unfold. But if that goes south on us and that doesn't work out, well, maybe we don't want to hold it all the way down here again to its last support level. Does that make sense? Does that make sense, all? Okay. You want to maybe cut it shorter, potentially. So what we could do is, or at least try to put that stop for a potential exit or potential exit level a little bit higher. So I'm just going to say 71.75. Okay. Wanted to give you a little bit more color on that, just so you could kind of get a sense of, kind of the logic behind it. There's 71.75 there. Let's go confirm. We'll put this in before it closes, and we're just buying 100 shares. Just as a sample example trade on this right now. You can see our orders in place, that OCO bracket. So OCO one cancels the other. If our upward target gets hit, well, we don't have an order down below to try to get us out. Okay, I just hit submit. So I think that went through. Didn't I? Yeah, I can check on the chart. Yeah, so it's all in place right now. Excellent. Okay, well, let's move on to healthcare now, since we've got that in place. I think Cam's got us all caught up in the chat. Very, very good. Okay, remember that we saw it earlier. We're going to come back to it because healthcare, too, could be sort of a defensive. It's known as a defensive type play. The group, I should say a defensive type industry. Clarification there. There's our 6-month, and that was that trend line breaking. So we looked at one kind of on the top end, utilities. Now let's look at one on the bottom end and do a comparison as well. Back to it. First up, BIIB. Okay, been consolidating for some time here. Look over here with me. Look at the sideways range. Oh, just getting above it. We are past earnings. That's nice. We just broke above, and maybe we're resting at support right here. Okay, we don't have a ton off the bottom just yet. It's maybe still in the process of bottoming, but you can still see that we're getting a little bit of action above our range as we're breaking out higher here. Maybe it'll take a little bit more time for volume to come in. These guys have been down for a little while. So that's BIIB. We don't have to do any comparisons with dividends here, but there is the PE ratio. Again, also, we did talk about dividends, and of course, dividends, as we read in the disclosures, there's always a risk of those dividends being cut. Anytime you look at dividends, we already talked about that, but look at that. That's at 13.24 PE. Now, what might the breakout range be? Well, there are a couple of scenarios here. Just to kind of speed things up, show you guys that could be the flag of the pole, and then the next run could be something like that. Look like a potential swing trade? Oh, right up to a big round number and a prior high at 150. Sometimes we'll find resistance at those levels, just like you saw over here. But that could be a swing trade coming up there. By the way, we're at 138 right now. 138 and change. So maybe, 11 and a half points or so on a move like that. Next comparison, MRK, still in the same group. Notice it's coming above its range right now. Now, this is a little bit different. I'm not really seeing a flag pattern here at all, but what I am seeing is a measured move. Notice down here, I'm drawing off a number of support levels at the bottom, 75 and 85. 10 points. Now, have we broken above this range yet? Not exactly, but it is resistance, and maybe we're just barely getting close to breaking above. Very, very similar. That, too, is not 11 and a half points, but it is 10 points from 85 to 95 if we put a trade on here. This one does have a little bit more money flow action off the bottom, as you can see. We actually, even though this was a similar high right here in price, look down here with me. Money flow made some really good progress because that's just still a similar high in price, but we are raising higher. We're getting up there more. Next one, right here. Take a look at it. 6 million shares on Merck. Biogen, 8.6. Look at the spreads. Still okay. About a dime. Well, it's about 11 cents or so. Well, it's moving, but you get a sense of it. Where's Merck? About a penny wide. All right. So are we ready for another poll? Let's do it so we can put one more trade in here. And then I've got a few bonus ones I wanted to look at with you guys as well. And while we're waiting for that poll, I'm going to talk about, something that we've used from time to time in this class. That consolidation can be found by using the TTM squeeze as well. So do we take which swing trade? BIIB or MRK? Okay, cool. So folks, if we could shoot again for at least 30 votes, that would be fantastic. If you're able to vote again, just like you did before, or would like to vote this time, would love to see it. Okay, so we'll give that just about a minute. And then in the meantime, let me show you this. An indicator we have used in the past. I'm going to take these off before, and that is going to be the TTM squeeze right here. I am going to just take off our histogram here and just leave the lines on. Now, this is when the Bollinger Band comes within the Keltner channel. Do we see a squeeze here? Not really, not on Merck. How about BIIB? Low price volatility. Ooh, we sure did. Right through here. And now what we're doing is sometimes we're coiling and we're on the verge of breaking out. That's how I found this company here, Biogen. In addition, the first two we looked at, there's XEL. Notice we just got into a consolidation. We got into a consolidation here. And when we broke out, we had our green dots. That's price expansion range. You can see that right there coming out. And then you got it right there, perhaps starting to move higher here. That's the question. But we're getting indications, not just from the possibility of a hold or a price pattern or a break above resistance or good money flow, also another separate indicator. Okay, let's kill this. Ooh, geez, we're at 52%, I think. Who wins this? Okay, awesome. 54 votes. We easily cleared our margin. We got to put a trade on Merck right now. Okay, so you got Merck and BIIB. Think you guys might have gone with, not Excel, there we go, with the big volume perhaps. I'm going to right click. We're going to go ahead and do a buy custom OCO bracket order. Our upward trade was about a 10-point move off of that level. We're very, very close to it. It's just kind of tempting that level. We're playing this as kind of a breakout, anticipation of a breakout. 95 would be our measured move range. A lot of resistance there. Ooh, tons of it. Interesting how that target kind of meets that resistance. We'll see how that unfolds. All right, so 95. And then what we can do down here is oftentimes maybe just use a percentage pullback because we're kind of in the middle. That's about a 1.5%, about to 83. So 95 to 83, it's a 1.5% pullback. That could be a common number that people use. 83 and 95. Now, did I say 83 and a half? I think I did. Hang on. I'm just doing it below this low. So it's about, yeah, just straight up 83-ish. Okay, that's fine. So let's do a confirm and send. I got my GTCs in there. Let's pull it up over here. And there we go. We're just confirming this. We're going to go ahead and set up our second trade and send this on through. All right. So hopefully we'll get a fill on that. That is our trade right there. And that's the range. Do you like that risk reward? Risk right there. Potential risk. Okay. So we don't know. We talked about the stop order, potential exit level. We could just say potentially that's a very, very tight risk. But look at the reward in blue up here. If you get in here, you see the difference? On a measured move, that's the reward in blue. Risk versus reward, just as a general idea. Okay. And again, those numbers can vary once the trigger takes place, but you get a sense of it. And by the way, it does help when you have a highly liquid stock as well. Okay. Should you set price axis to auto to see the bars on the squeeze study? You know, you could. Yeah, you could do that. Mine's just kind of set up as it is right now, and it tends to map out okay. And I do like to just look at one indicator at a time there, John. Sometimes I can do two, you know, RSI, money, whatever the case is. But here is kind of an example. Folks, it's been great being with you. I did say that I would give you a couple of others just to look at right now. SNPS, just kind of some bonus ones. Look at that potential flag pattern. Oh, and we're going into a consolidation range as well right there. FSLR, breaking out sharply. Solar, and you can see we're back to a range where it might start to extend here. And finally, GD, sideways, just getting into that little bit of a sideways channel there as well. Will be interesting to see how that does unfold. I was going to just highlight this too for you guys real quick because I did do a little XVid just to show you guys X video um, on X, that is, I should say, an XVid EO. And it's down here where we just compared some of these coiling stocks. Now, I've been planning our class out for a little bit as I did this, but I put this, if you want to see some of the other ones that came up on this list, you feel free to tap into that as well. Be sure to follow Cam as well, Cameron May CS. But that is right from the X handle if you want to check it out, folks. Always great to be with you. I'll look forward to future discussions. Thanks so much, Cam, for your help as always. Great to have you all here, folks. Looking forward to future discussions. Take care, everybody. Have a great day.